Good morning, beautiful people. It is Joel McElhaney coming to you live. It is Monday Morning Coffees with Joel. So grab your coffees. We're going to talk about what happened in the real estate market last month. I have all the statistics that just came in the other day that we're going to review together. So grab your coffees and let's talk about this. All right, so home sales in St. John up from May totals. The number of homes sold in the board was 220 units in June. That's a decline of 30% from June of last year. And home sales were 20.7% below the 5-year average and 6.9% below the 10-year average. So on a year-to-date basis, home sales totaled 992 units over the first 6 months of the year, declining 30% from the same period in 2022. So this is what the board president had to say. Although down from last year and still below the long run average, MLS home sales in June were higher than in May. However, the number of newly listed properties declined 18% month over month, falling well below the historical norm for this time of year. And this was Kevin Donovan, president of the St. John Real Estate Board. He continues to say, as sales trailed behind the pace of new listings, there was an uptick in overall inventory. This marks the 5th consecutive month of active listings growth, pushing the total number of available homes above 500 for the first time since autumn 2022. However, it is important to note that the overall inventory remains considerably lower than what is typically expected for the month of June. So the MLS HPI benchmark price rose in May, and the apartment category as well, with significant 6% increase. So right now, the average price of homes sold last month, $315,500, increasing by 7.2% from last year. But the year-to-date comprehensive average price right now in our market is $297,275. So it's a modest decline from the first 6 months of 2022. So we're seeing our price hovering around $300,000 in this market. Although inventory is slightly up, it is still historically low. We still have significant demand, which is keeping our prices elevated. The number of new listings fell 11.9% in June. There were 340 new residential listings in June. And this is the lowest number of new listings added in the month of June in more than 15 years. So there's where it is, folks. I keep saying this is what's driving the market. It's low demand, the opposite. High demand, low supply. Residential listings numbered 553 units on the market at the end of June, a large decline of 13.2% from the end of June last year. Again, they haven't been this low in more than 2 decades. So months of inventory is 2.5 at the end of June. And that means if we didn't add any new inventory and we froze it in place, all of the listings would be sold within 2.5 months. So that is still relatively low, which is saying there's still a quick turnover of homes. They aren't sitting very long on average. And that is where we stand in terms of the real estate market as of today, folks. This is the latest and greatest. I hope you enjoyed and found it helpful. Until I see you again, keep being awesome, and we'll talk about some exciting new things next week. Take care, everyone.